Good morning and afternoon to all of you. I'm Stacy Factor, the Senior Vice President for Trade Products at BAF. On behalf of the association, I'd like to welcome you to BAF's member briefing series. Today we'll be covering export credit and development institution response to the pandemic. We're delighted that you're able to join us today. Before I give you some housekeeping notes, I would like to just thank our co-chairs of the Structured Trade Export Finance Committee, Daniel Pino and Gail Rohenbaugh, who were instrumental in putting this together. Today's briefing is available to all. We're scheduled to run for a total of an hour and have built time in to answer questions at the end of our speaker remarks. Please use the chat panel on your screen to submit questions during the panelists' remarks, but we will answer as many of your questions as possible in the time allocated for Q&A at the end of the session. This briefing will be recorded and will be available for download on BAF's website at www.baf.org. I'd like to make it clear that the views expressed by each of the participants are their own and not that of their organizations. Further, this briefing operates under Chatham House rule, meaning that participants are free to use the information received, but neither the identity nor affiliation of the speakers nor that of any participant should be revealed. If all of your questions have not been answered or you're running into technical errors, feel free to email info@baf.org and we'll follow up accordingly. With that said, I'd like to quickly introduce our panelists, since their detailed bios will be displayed at the end. We have Eno Lee, the head of new products at the IFC, Luke Lindberg, Senior Vice President, External Engagement at the Export-Import Bank of the U.S., Robert Pelletier, Chief Representative for United States at the EDC. Over to you, Luke.
Good morning, everyone. From here in Washington, D.C. Thank you, Stacy, so much for having me today. Always a pleasure being here with the BAF team. You guys are a tremendous partner for us, both you and Todd and the whole team. So appreciative of the important role you play in our world and the partnership you provide there. So thank you again for having us, me in particular, on today to discuss this topic. And for everyone on the call, I hope you are healthy and well. Also, recognizing these are really challenging times for everybody and unprecedented times. And I imagine that many of you are working through this as best you can. And I hope that you are doing so with the support of others around you. I'll start briefly today and talk just a little bit, very briefly, about EXIM's recent milestones we've hit, just to put a backdrop around the comments I'll make about our COVID-19 relief measures. Specifically, so for your sort of historical awareness, many of you already know this, but a year ago on Saturday was the time when Chairman Kimberly Reed of EXIM was confirmed by the United States Senate to head up our agency as our new president and chairman. And so we're celebrating her 1-year anniversary this week. And when she came on board, she really had 3 key priorities. Initially was to reopen, reauthorize, and then reform the United States Export-Import Bank. And we're proud to say today that we've accomplished 2 of those priorities. We have the organization reopened, and in December of this past year, we received our reauthorization. The President Trump, worked together with a bipartisan group of legislators in Congress to push through the agency's longest reauthorization in our history, 7 years, which we're thrilled to have. Chairman Reed was an instrumental part in that. The folks at BAF helped along the way as well. And that puts a really good backdrop for what we're going to talk about today in terms of our COVID relief measures. So when that legislation was signed, it included some new language in it that changed the game a little bit for how the United States Export-Import Bank is operating today. We'll call this language, it's in section 402 of our charter, and we're calling it the Program on China and Transformational Exports. And Congress specifically asked that we focus at least 20% of our overall exposure cap, so of our $135 billion that we're allowed to authorize to lend to folks, $27 billion of that towards neutralizing China. And they've identified some industry areas that we're really focused on building out our portfolio in. There's 10, it's listed on our website. But I'd really encourage you to pay attention to these areas and come and work with us on our ability to support these areas. We are, I would say, in an aggressive posture now because of this language. The neutralizing China language to us requires us to be more aggressive and to think about ways to be innovative in our financing schemes. And so I think that is what really has changed the game for us today in comparison to what the old EXIM would be. We just launched a teleconference series titled Strengthening American Competitiveness. And it's a great opportunity for you to learn a little bit about how we're viewing the world in that space. There'll be industry leaders and folks on that I'd encourage you to come and listen in. You can find out more on our website or at external@exim.gov. Which leads me to the COVID relief measures. And I think the aggressive posture is something that I wanted you all to be aware of as I roll through these, because we've taken some time to, I think, be as responsive as we can be in this environment. The word that I've heard most often, I've been on the phone with actually probably many of you or your companies and lending institutions over the past few weeks. And the word I keep hearing is flexibility. And I just really appreciate the fact that you all are sharing your feedback with us, that you're being good partners, and that I'll give credit to our banking staff at EXIM is that they're listening and coming up with innovative ways to address the problems that are at hand. And I hope you feel the same way. We're always open for phone calls and willing to work with you. So the few things I want to highlight in terms of what we've done to address and provide relief during this time. On March 12th, we took a pretty aggressive action initially to do some sort of, I would say, preliminary work where we increased our program waivers. We included new deadline extensions for loans. We streamlined some of our processing and provided flexibility in our working capital guarantee program, our multi-buyer and single buyer short-term insurance programs, and our medium-term single buyer insurance policies related to U.S. exporters. So that was sort of step one in our process to provide relief. And then our board got together later in March on the 25th and reviewed some additional measures and provided support for us to roll out 4 key additional measures. The first was a temporary bridge financing program for foreign buyers that's at 1 year in length. The second measure was a temporary progress delivery payment financing program, which allows us to support disbursement for pre-export payments owed to manufacturers during the manufacturing process, as long as EXIM is providing financing for the program. The third program was a temporary supply chain finance guarantee, where we are able to, you guys as lenders are able to purchase at a discounted rate receivables held by suppliers, which helps provide liquidity, obviously, to folks in a time of crunched liquidity right now. And then the last one was an expansion to our working capital guarantee program. And the expansion that we've looked at are sort of twofold. We included, we increased the definition of eligible inventory in that program And then we also recently, just a couple weeks ago, increased our exposure or our coverage of the working capital guarantee from a 90 to a 95% coverage limit. So we're working diligently to partner with you all in that process and make sure that that's a success and hopefully provide liquidity relief. And again, that increase from 90 to 95% came from a series of conference calls and one-on-one listening sessions we had with a number of lending institutions. So again, kudos to our EXIM team, done a great job listening and trying to be as flexible as we can be. Thanks, Stacey.
Okay, over to you, Robert, from EDC. Thank you very much for joining, and thank you, Luke, for your support for BAFT as well.
Well, thank you, Stacey, and good morning, everybody. Robert Peltier, Chief Representative for EDC. I want to thank BAFT for including us on the webinar today, and I also echo Luke's comments with respect to hoping everyone out there is keeping safe and well. What I thought I would do is give folks on the webinar a bit of background in terms of who EDC is. I think that might be helpful. I'll talk about the U.S. presence that we have at EDC, spend a bit of time on the Canadian experience as it relates to COVID, and then speak specifically about some of the programs that we have in response to COVID. So I'll start by a bit of background on who EDC is. So we are Canada's EXIM. So we really are Canada's export-import bank. We're owned by the Government of Canada. So we say we have one shareholder, that's the Canadian Crown. We're a Crown company. Our headquarters is in Ottawa, Canada, the capital. EDC itself has been around now 75 years. We offer financing, insurance, and knowledge solutions. And really our mandate and our goal is to help Canadian companies compete globally. In terms of numbers, to give some context, so in 2019, we did 103 billion Canadian in business for Canada. That's about 73 billion US. We supported nearly 17,000 companies, of which about 86% were SMEs. And it's estimated that support we provided helped provide upwards of 500,000 jobs in Canada. So in terms of our financing program is a bit unique, that it's mainly commercial and mainly funded typically in partnership with other FIs. So we have a long history of that. And in 2019, so of that 103 billion, about 27 billion of that was financing. Just to give a sense of our footprint and where we are. So headquartered in Ottawa, but we have 20 representation offices around the world. Our last two, most recent in the US, which I'll speak to in a minute, and another 20 across Canada. And the purpose of the representations is, of course, to be closer to our clients, be they foreign buyers or Canadian exporters. So maybe I'll pivot a bit and talk about our US presence. So I've been in the role now, Chief Rep US, for about 5 years. And you know, I think everyone on the line is very aware of the long-standing trading relationship that Canada and the US has, witnessed by the renewal of NAFTA via the USMCA. You know, when we speak to Canadian SMEs about the idea of exporting, the overwhelming response is their first market of interest is the US. So clearly it is incredibly important for us. A lot of these companies see the US and US multinationals as a launching pad to take their products and services globally, and multinationals have a way of doing that for them. You know, in terms of our history, so, you know, when I came into the role, we had about 30 corporate finance relationships that have been built up over the years, mostly predicated on trade flow with Canada, so US companies that buy Canadian products. But we hadn't had presence in the US up until last year. And what we did is we accomplished our work through working from Ottawa, but then a significant network of trade commissioners throughout the US. There's 18 trade consulates in various cities in the United States. And now that we have presence, we co-locate in Chicago and in Atlanta with those trade consulates. So where the trade commissioners are bringing sort of the local market expertise to Canadian companies that are interested in doing business, our folks now focus on the ability to bring financing solutions as part of that. So we're really excited, and we're seeing some great growth with that. So really, the mission of the folks in market is to to support US companies that have financing needs, but also to work really closely with our folks in the bank network. So, most of the financing we do it in collaboration in a complementary fashion with bank partners. And, it's really exciting for us to be in the Midwest and in the Southeast, where there's a really robust regional bank network that we're looking forward to working with as we grow and expand in the market. So just to give a bit of background in terms of the Canadian experience with COVID, we have a research panel that we went out to get kind of a read of the market recently. And I don't think this is a surprise to anyone on the webinar, and probably what you're experiencing in the US as well. So we found that a third of companies that responded said that they had a 50% drop in sales since January. So that's significant. And 1/5 would require financing support through to mid-May through to now, and then another 2/3 beyond that into July. Furthermore, 2/3 of our survey respondents said that they saw their exports impacted negatively. Again, not a surprise, but this gives a sense of temperature out there. And then kind of the last observation was about supply chain. So we spent a lot of time working on supply chain and making sure that our US buyers can be comforted that their Canadian suppliers are supported through this. And the observation is that supply chains are slowing down, be that importing from Europe to export elsewhere or what have you, or Asia. And the stat was, I think, 1/5 of our Canadian companies are looking to source from different countries. So that's some of the impact in Canada, immediate impact from COVID. So now what I'll do is, in my remaining time, is walk you through some of the programs that have been announced that we're working through here in Canada that have some impact on the US as well. So late in March, our shareholder announced programs that would be sort of tailored specifically to size of company and maybe sector. So the first program is really in the micro space, so addressing the needs of what we call micro exporters, or sort of below the SME threshold. And that was to provide $40,000 loans with a repayment profile where if the company pays back the loan within 2 years, then a quarter of that 40,000 is forgiven. And that's all done through the banks. So the banks, the Canadian and house banks, as well as other banks that have presence in Canada, they own that relationship. And then they kind of approach us and say, would you be willing to provide this financing behind it? And I think the tune of that program is about 25 billion Canadian, and it's been very well received. As we move into the SME space, we have a program that we're calling BCAP, which is the Business Credit Availability Program. And what that is that's EDC guaranteeing liquidity facilities and working capital facilities over and above their sort of normal financing needs with financial institutions. So the amount per loan is 6.25 million Canadian, that's the max. And EDC is providing an 80% guarantee of that. So that announcement came out again towards the end of March, early April. And then it took time for the Canadian FIs to stand up their programs at each of their respective institutions. And now we're seeing, as they have conversations with their clients, some of these opportunities are now flowing from the banks to EDC. I should say too that important to know, if you have a US client that has a Canadian subsidiary, and that Canadian subsidiary is banked here, so they have an independent treasury function and they borrow, they can participate in this program as well. So that's important to know. More broadly too, at the end of March, our shareholder announced us to have what we're calling expanded domestic powers, meaning, we do lend domestically, and we've been doing that for many, many years, providing liquidity and capital to companies looking to export or to help, facilitate working capital so they can do that. And the powers expanded sort of through the COVID relief package to allow us to do more for companies that perhaps aren't necessarily seen as exporters, companies that need that support domestically. So that's a little bit new for us, but not new in the sense that we haven't, not done that before with Canadian FIs. So what that means is we're seeing sort of more take up and interest in maybe the mid-market and larger space, working with the financial institutions here, that if there was, say, a covenant breach, which led to, a facility reduction or a borrowing base, margin issue that meant that the revolving facility had to be reduced. We're looking at those to say, can we provide incremental capital to help that company sort of through this short-term challenge that they're having. So that's something that's new. And I'd say too that one of the big important things for us is to make sure that our U.S. buyers are aware that their Canadian suppliers have us behind them. So providing financial solutions, insurance solutions to make sure that they can see through this, so that as U.S. buyers are looking at their supply chains, they know that their Canadian customers have that support through. So I think that's it for me in terms of walking through a little bit about EDC, our US, as well as COVID. So maybe at this point now I'll pass it to Ino Lee with IFC to speak about their assistance programs. Thank you.
Okay, thank you. I hope people can hear me. I apologize, but I have no internet connection today, so I'm joining by phone. Hello?
Thanks, Ino.
Hello? Okay, great. Wasn't sure if I was muted or not. Yes, I think if you can kind of look at the slides, I just kind of want to talk a little bit about our institution and what we're doing in the context of COVID-19. We are at the IFC part of the World Bank Group, and we are the private sector arm of the World Bank Group. We invest in the emerging markets, and there are, I would say, three main business segments in the institution. One that's infrastructure, another that's project finance, and the third, which is financial institutions. So as far as the IFC response to C-19, we have announced at least an initial phase of a $8 billion investment envelope for the emerging markets. $2 billion of it comprises direct support to the real sector, and by that I mean we're focusing on the infrastructure and project finance part of the World IFC, and this really meant for existing clients, primarily in manufacturing, agriculture, and services. We will offer loans and in some cases other parts of the investments beyond loans, but these are in some meant for existing clients. Now the remaining three components, those are all housed under trade finance, which is part of the financial institutions group. The first $2 billion package goes through our flagship product, which is the GTFP, or Global Trade Finance Program. This program covers the payment risk of emerging market financial institutions to support trade in the export and import of goods. This is a product where we have been doing normally around, I would say, 5 to 6 billion a year, and now with the announcement of this, which is really meant for IDA markets, the most challenging markets, we expect to do an additional 2 billion. The second component is working capital solutions, which is US dollar loans meant for emerging market banks, primarily ones that are having difficulty accessing hard currency to facilitate trade. And lastly, there's a $2 billion envelope for GTLP, which is essentially a risk-sharing facility that we do with partner banks to originate these kind of trade assets. It's similar to kind of under GTFP, these are bank obligations that we risk share with usually large global financial institutions like Standard Chartered and Citibank. And with that, I think I will pause here. Hello?
Hello all. Thank you, Ino. I guess that brings us to the Q&A session. I want to say that it's unusual, but we have the chat box open, and I don't see any questions coming from our 175 participants. So I guess I should kick off with a couple of questions. Actually, someone said, okay, here's a question for Luke. Please comment on the market interest on the new initiatives related to COVID-19.
Yeah, thanks for that question. we definitely have seen an uptick in our letters of interest coming in the door on our board authorized finance side. So that's been very positive. And we've had a significant number of new touch points on our small business or short-term portfolio as well. I would say that the process of taking advantage of these new programs is still working its way through, but the interest level has been very high. So I can't say that we've had a number of deals yet go through that have been substantial, but there are a number that are in the pipeline that are, I think, moving in that direction.
I would ask also, it's very exciting that your working capital guarantee program went from, is 90 to 95, correct?
That's correct, yes.
And I would assume that there's been substantial interest in that. That has to be an exciting moment for EXIM and also for the lenders.
Absolutely, yeah. We've had a number of great touch points with folks in our delegated lending community. Chairman Reed is actually wrapping up a 3-week listening session where she's going to have an opportunity to have invited every single one of our delegated lenders to spend some time talking with her. That was one of the items that came out from her early calls in that space. I'll admit a number of lenders had originally expressed interest in 100% guarantee, but there's a lot of interest and excitement about the 95%.
There is another follow-up question that has come in asking about that program specifically. Are there any other changes to the working capital guarantee program that the lender should be aware of?
There are, yeah. There's a number of things. I would direct you to our website. We have a fact sheet that lists specifically of sort of all of the detail in terms of what changes we've made to the working capital guarantee program. It's pretty extensive in terms of offering, like I said before, sort of new ways to describe or to count eligible inventory and things. So I'll point you there. It's at our website. The first page that pulls up on exim.gov is our COVID-19 response measures. And there's a great one-pager there. It's actually 2 pages that outlines all of the specifics in terms of that program.
Thank you. I actually have a follow-up for you as well, but I wanted to get Robert involved. So one question I would have for Robert is, what's the uptake look like at EDC for some of your recently added programs for COVID?
Yeah, I think a similar experience to Luke, that we've seen significant uptake in the micro space. So I think that was probably reflective of company needs. So below what we call our SME category, companies that really need sort of that liquidity piece quickly. So that program has been incredibly popular. We like EXIM have had a slew of inquiries. We have an export outreach group, which is sort of a general number that people dial into. So early on, there was quite a bit of activity there. As we look at kind of some of the other programs, so if I think about the what we call again the BCAP guarantee or the business credit availability, this was a function of, again, we're letting the FIs sort of harness and run that program in the sense of they have the relationships with the client. So as those have been stood up over the last couple of weeks, now we're seeing kind of the wheels turning with some of those bankers to see how this complementary capital, there's incremental capital, could help their client through and having those discussions with the client. So those are starting to roll in now. And then I'd say that reflective of kind of our human resources. So in our global business development team, of which I'm part of, about half of those people have been redeployed, either virtually or or in Canada, wherever they happen to be, to support the domestic asks. So that's reflective of I guess the take up. In my case, it's been looking at that mid-market space where banks are looking to bring in incremental capital providers in a direct funded fashion, I should say, for the most part. So a lot of those requests are coming in, and a lot of what we're doing now is trying to work out, well, how does that then fit now with the need of the client, and then what does this look like a year from now, 2 years from now? How does that sort of evolve? So I'd say a lot of interest, and really happy to be doing this. And again, I should repeat too, we're helping Canadian companies, absolutely, but there is that opportunity to also help, U.S. Owned companies, or the subsidiaries of U.S. companies. So that's where we're seeing that sort of cross-border help there. But no, thanks for the question.
Thank you. I guess I should pose the same question to the IFC. Has there been a fair amount of uptake in the programs that IFC has rolled out related to COVID?
Yes, I would say, while I don't have the latest information on the real sector component, as far as GTFP, I think we have already utilized more than half of the $2 billion envelope. On the working capital solutions, also, while we haven't committed anything, certainly our pipeline is gone beyond the $2 billion envelope already. Lastly, on the risk sharing, we're around, I think we will be around the 40% mark probably in the next week or so. So I think I would say that there's been quite a bit of interest and activity in this area, especially given the fact that there is a lot of, dollar liquidity stresses, especially outside of U.S. markets or outside of OECD markets.
You may have to increase your numbers if it gets as much uptake as you're experiencing already. There's a question here for Luke related to the China position. It wasn't clear to one of our listeners how EXIM looks at the neutralizing, quote unquote, China perspective.
Yeah, great question. And it's something that we're still working through. Obviously, it's been only a couple months here since our legislation was passed. I would say we recognize that some things need to change, right? China is playing a game that nobody else is playing. They're spending money in ways that people outside of the OECD arrangement or inside the OECD arrangement are not able to sort of utilize the same tools and techniques and rates and tenures that they employ. And so we understand that there has to be some things that will change in terms of leveling the playing field for our U.S. companies. So we're working through some of that. We recently brought on board Dave Trulio to lead this program for EXIM. Dave is a detailee to our agency from the Department of Defense, has worked on China-related issues for a long time, and is doing a fantastic job to help us stand this up. So more to come, but I think you can expect to see that there will be some changes in the way that we operate, and how do we find the right path to make sure that our companies have an ability to compete fairly in the marketplace, and have financing not be the determining factor that wins or loses a deal, but have it be the quality of their products and services, and have them compete on merit, not on financing.
Thank you, Luke. Though I'm reluctant to talk about anything related to pricing, as that could be, it isn't something we should be discussing in general, but there was a question as to whether there's been any reduction in fees with, for the clients in the COVID-19 arena. In other words, are the fees the same exact fees as before, or has there been any changes in the fee structure during this period? Robert, I think that's probably something you might want to address. I obviously don't want to hear numbers or anything, just curious.
Yeah, I can just speak in generality. So, first of all, the microspace loans, those are interest-free. So that's that's a significant reduction. And then otherwise, our programs are really commercially driven. So, what we offer and what we provide is done in a way that is consistent with market, the market, the going rates and whatnot, whether that's interest margins or the fees themselves. So no specific sort of reductions there, but I think it's more the way we're looking at it is a broader appetite to do more, and that's really where we're providing value.
Thank you. I'm probably going to show my my age and my ignorance, but is there any requirement for a financial institution that's leveraging the EDC programs to have a presence in Canada if it is not, for example, a Canadian bank or a Canadian entity?
Yeah, I mean, what we've seen is, so, I mean, I think the vast majority of, it's probably reflective of a bit of a different banking sector here in Canada, but, the vast majority of Canadian companies have their, their house bank relationship with Canadian banks. And then furthermore, they would have them with, US branches, US-based banks that have branches here. So I could take, top of mind for me, we have relationships with PNC, of course, with JP Morgan Canada, Citi Canada. So they all have presence here. So that's how we're running this program. So it is domestically focused, and the companies themselves tend to have that relationship with that branch here. So if that answers the question. So we haven't seen, in fact, we've seen cases where, we've had conversations. I can think of one last week where there was a US company with a significant Canadian subsidiary being banked by a Canadian bank out of New York. So, sort of illustrates the cross-border nature of what we do. But, we're really focused on that Canadian company and less fussed about who's banking them. Yeah.
That's very helpful. For Inno, what kind of appetite or what kind of programs or interest are you seeing during the COVID challenge? Are the requests coming in similarly, or is it a different type of appetite, a different type of usage of your programs that you're seeing during this time?
I would just simply say that, well, we're largely, our unit is largely in the trade finance space. So I guess I would just mention that there seems to be a lot more demand for our financing, but I wouldn't say there's anything, as far as, market demand, nothing that's kind of different than what we're normally doing. And as far as kind of our responses here that we have in the presentation, those are ones we thought would have very good reception in the market. And I think for the next phase, there may be different products that we would probably introduce, just given the fact that initially, I guess our strategy was to promote trade, but there will probably be other areas and other kinds of financing needed as time goes on.
Thank you. Does everybody have the opportunity to let us know if the participants in today's series, webinar or briefing series, have access to you all? I think we have the access points listed on the slide here. Should there be any additional questions for the folks here? So I can see that it's on the slide, but I want to make sure that everyone sees it. So if you have questions for Inno, you can reach him at ilee@ifc.org. For Luke, please go through the external at exim.gov. For Robert, R. Pelletier at edc.ca for Canada. We have some upcoming webinars in the next couple of weeks or so. We're doing one on digital ledger payment commitments, which I think is much more in the digitization space. So any of you or your organizations that might like to understand how distributed ledger technology is moving us forward in commitments to pay for various trade products, you might be interested in that. And we also have something coming up entitled Paperless Trade Initiatives. Now it will be coming out, that particular one will be focused on the Asia market and Asia timeframe. But I want to remind everyone that all of our speaker series, our member briefings, are being recorded and will be available on the BEF's website for for playback in the event that you're interested in that one. It is very Asia focused, but it could be very relevant to your business. I would like to know if there are any other questions. I'm not seeing any more coming in. But
Would it
if
be all right?
there are, sorry, go ahead.
Sorry, would it be all right if I just address that fee question real quick too from the EXIM perspective?
Oh, please go right ahead.
Just to mention a couple things, because I think there's a good story here for us. One thing is we were in the process before COVID began of revising our working capital guarantee fee structure anyways, and we did expedite that, and we have rolled out a new fee structure for that program that's effective on May 1st of this year. So if you're working with us right now, you should have already received information on that. If you haven't, please let us know. And obviously, if you'd like to work with us, we'd love to have you. And then things like our supply chain finance program, we've actually posted our fee structure on our website for that program as well, and other things like that. So we're trying to be as transparent and, again, as flexible as possible. I know a number of times folks in your world, the lenders, have brought us opportunities that we've taken a look at and been able to be flexible on some of the fees with respect to certain deals during the COVID time. So you should reach out to your EXIM banking point of contact and discuss anything in that space with respect to your particular needs on a project.
Thank you very much, Luke. I want to say thank you to all of our speakers. If there are no other questions, I'm going to close the session. Please feel free to get back to us with any questions that come up. I want to close today by saying thank you to our presenters, as well as to all of you for your attendance. And we look forward to coming up with the next most important issues around COVID that you would like us to focus on. So please stay in touch to let us know what those are. And also remember that the recording will be available on our website, I would say, before, maybe by the end of the week or beginning of next. Thank you all so much for your attendance.
Thanks, Stacey.
Thank you.